Hello traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for September 10th, 2023. Hope you all are having a great weekend, and first and foremost, I want to thank Greg Horvat for stepping in and doing the week ahead video last weekend while I was out of town. If you enjoyed his video, make sure you give him a thumbs up. Tell him down below in the comments how much you enjoyed his video. I'm sure he'd love to hear that. And also, if you enjoy these videos and you're glad to have me back, hey, give me a thumbs up and give our team a thumbs up. Appreciate that. It's free to do, so do that. And subscribe to the channel. Okay, we got a lot to talk about this week. It's obviously a very big week. It's a very big week ahead of an even bigger week in 2 weeks. So the reason why this is such a big week in the markets is we do have CPI. And so I'm going to give you my trading plan basically around the dollar heading into CPI ahead of the FOMC, thrown in with some ECB sprinkled on the side, which is also going to be a really big event this week. There is so much happening this week, so we're going to get to it. But like I said, if you really enjoy these videos and you think they're really important to your trading plan, formulating your trading plan throughout the course of the next week, make sure you give us a thumbs up and tell us and tell me down below, especially if I miss something. I do want to also mention this really quick. If you don't listen to the flow show in European trading hours, make sure you do that. You can click right here to register right from our website. It's right where it says webinars. You have Ryan Littlestone and K-Man. They take you through the European hours and kind of the setups throughout the course of the day. I'm asleep during that time, but if you want to catch me and my analysis and the rest of our team's analysis throughout the course of the week, you can do that right here on the Face Show. That is free every single day. So I know you're just listening here to what I have to say every week. But if you don't listen throughout the course of the week, you won't know how my opinions may have changed a little bit based on the data that we've gotten throughout the course of the week. So, we're going to have a very busy week this next week, obviously, and I want to highlight the fact that we do have CPI, and it's going to be a really important one because it's going to set expectations not only for the FOMC coming up next week, but also, what the Fed may or may not do going into the end of the year. What's also going to be really important is we have the ECB the next day, and that's a 50-50. That's a toss-up on what to expect. And I'll talk about that more and go through the Euro charts here in a second. The S&P and the markets as a whole are kind of at a crossroads. We hit a really important support this week. If you follow me via Twitter or X, then you know that I was a little hesitant about being short risk as we went into the end of the week. On Thursday, I told you all that we were hitting support, and we've bounced a little bit and we've consolidated in a lot of markets. We'll go over those as well. And one of the things that we're going to be missing this week is we don't have any Japan data, at least none that I saw that's meaningful. But that doesn't mean that the dollar Japanese yen, the dollar yen is what I meant to say, shouldn't be on your radar, because based on what might happen following the inflation data, we could be on intervention watch this week with the BOJ. And if I sound a little jumbled up or it's a little stuffed up, excuse me, is because I have been fighting a cold this week. So I feel much better today, but still tail end of it, if you will. All right, so what we're going to do is let's go into the markets, and we'll just start with the dollar yen. And remember, these charts are the ones that I draw for you when we're here on the week ahead. So I haven't updated these charts in a couple of weeks, obviously, since I was out last week. But notice that the US dollar Japanese yen is still playing out that bull flag pattern. And when we came down and dipped, we didn't invalidate the flag because we didn't really break down. And that bull flag pattern still points towards 150. And you notice that our harmonic pattern here with the, this butterfly, it points towards 149. Also, if you just extend this channel resistance, that's going to take you out to basically the same. And I'm going to delete this really quick, and I'm going to clone this, and you can see how well respected, whoops, I didn't want to do that, how well respected this channel is right now. So, I would say that all the way through here, you're going to find some resistance in the US dollar Japanese yen. And knowing that it's at 150, there's a lot of people that think that around these levels, the Ministry of Finance might actually step in and intervene. I know the risk reward is to potentially be short up here. I'm probably going to do it if we reach for it. I'll probably do it in very small positions, knowing that the risk is if there is no intervention, then we can really get a squeeze, and especially based on the U.S. data that's coming out this week and the FOMC next week. But a counter trend trade, might be in order up here. So we'll see how it goes, and it's all going to really depend on the data that comes in on Tuesday, which is obviously, or on Wednesday, excuse me, which is obviously the US CPI. But let's go in and talk about some of these different currencies. And remember, we're going to be talking about equities as well. We're going to be talking about the S&P, the Dow, the Russell, and the Nasdaq 100. We're going to take a look at the DAX. We're going to take a look at precious metals. I think all of this is very important as we go through and try to navigate through and put the puzzle pieces together this week. All right, so let's start off with the beginning of the week. So on Monday, I'm going to cover something that I normally don't cover here. Is I'm going to talk about the US dollar Norwegian krone. Now, the reason why this is really important, first of all, is on Monday, well, it's actually Sunday night, Monday morning. So early Monday morning, for those of you that are in Europe, we're going to have Norway's inflation data. And what you'll notice about the US dollar Norwegian krone is we've been in this very tight trading range. Now, the reason why that's important, let me delete this fib level here. Like I said, I'm going to do some drawing. I do drawing on the US dollar Norwegian krone every day. Matter of fact, if you use Forex analytics, you can actually get the analysis from the US dollar Norwegian krone, because we do cover it, and you can see my charts up here, and this is what my charts look like, and you can kind of see where I'm going to go with this. Anyway, let me go over to the US dollar Norwegian krone. You notice we're capped by this 618 retracement. That's really, really important, because what we know is if we actually get above the let's call it 1080 level, that could be really bullish. Now, do you really expect that with what we see as inflation, pretty lofty around the globe? We're looking at Norway's inflation data. Now, also one of the things that we have to factor into all of this with the US dollar Norwegian krone is what's happening in crude oil. If you guys haven't taken a look at crude, let me see if I have. Yeah, I have crude up here, and I haven't drawn on this chart in obviously quite some time. So we're going to do a little bit of drawing here with the crude oil chart. Crude's in breakout territory, and we are obviously in it's a bull flag, pennant, however you want to look at it. It is bullish, and it actually targets mid-90s, 95, 96. That's where the bull flag pattern actually points. Now, one of the reasons, and if you think about like Norway is just their biggest export is the black gold, if you will, is crude oil. And one of the reasons why the US dollar Norwegian krone has not really exploded higher, in my opinion, is because we've seen this insatiable move in crude. Crude continues to rally, so that's supportive of the US dollar Norwegian krone, where you see the did I say US dollar Norwegian krone? I meant it's supportive of the Norwegian krone. So, when you have the euro that's breaking down and the US dollar Norwegian krone is not, that is that tailwind that the Norwegian krone gets with the move in crude. Now, again, if inflation comes in, let's just say it's weak, that US dollar might continue to move higher against the Norwegian krone, and you might even see it break out despite this rally that we've seen in crude. Now, crude oil is obviously bullish, but whenever you get something that's moved the way that it has, let me pull it up really quick. When you get something that's moved the way that it has, there's a good chance, since we have RSIs, in overbought territory, we might get some sort of consolidation here, and you might see us actually pull back towards this breakout point that you see right here. If that happens, then that might give further fuel for the US dollar Norwegian krone to continue to break higher on a weak inflation print. So just watch the US dollar Norwegian krone. We're up against some pretty key resistance. We're in this range. And the thing is, when you're looking at price action and you get a tight trading range like this, tight trading range means that a breakout, when it comes, it tends to be pretty explosive, especially when we've been going sideways for like a month. So, you're getting, big desk traders, a lot of bank traders love to trade the Swedish krona and the Norwegian krona. They call it the Naki-Saki if you're looking at that pair. But when you get in a really tight trading range, they get antsy. And when you get a breakout or breakdown in one of these currencies, a lot of bank traders like to jump all over that. So just keep an eye on the US dollar and Norwegian krona as we head into the beginning parts of this week for those of you that trade it. Now, also on Monday, we're going to have Mexican inflation data, or excuse me, industrial production number. Now, if you haven't seen the US dollar Mexican peso, we are in breakout territory. Most important about the US dollar Mexican peso, and again, if you followed via Forex analytics, I'll just show you how in depth we've been, just because I'm bullish and I'm long the US dollar Norwegian krona personally. So obviously I've been paying a lot of attention to it, and I've been adding to positions and really trying to navigate through this. You'll notice there's a lot of intraday charts on the US dollar Norwegian krona, but look at how we've respected that breakout point multiple times throughout the course of the week. So when we got the breakout above the 1745 level, and we rallied and then came down and respected that level, it's a huge support. And the interesting thing is about the US dollar Norwegian krona is we closed near the highs of the week. Now we have, like I said, Mexican industrial production numbers. Obviously, the US dollar Mexican peso is going to be influenced by what's happening with risk appetite. But the real big clue this last week, if you missed it, is when Mexico took off the hedges. Was it the end of? Not the end of. Maybe it was the end of the previous week. They took off their hedges they put on post COVID, because this is what happened in COVID during the COVID lockdown. The Mexican peso lost 40% of its value following COVID. They had to step in and do something, emergency measures. Well, they've removed those emergency measures, so you can see what a big move we've seen. And Banxico's like, okay, that's enough. We've regained enough, stability here. So now you can remove those hedges. Well, when you do that, obviously, naturally, you're going to see some Mexican peso weakness. So if you all missed that, that's one of the reasons why you're now going to have this, peso headwind, I guess is the way you can look at it. And remember, as carry trades unwind, then on top of the hedges being unwound, you have a recipe for the US dollar Mexican peso really reaching the 200-day moving average in not too distant future. So we'll talk about that more in the weeks ahead. But the one thing that I do want to point out is while we are above 1740, so 17.40, you have to imagine the next stop is going to be the 200-day moving average, or you can see this previous support. By the time we make it up here, the 200-day moving average will probably reach that level, which comes in around 1790. So those would be like my natural targets for the US dollar Mexican peso on the way up. Now, if we go into Tuesday, Tuesday we have UK GDP. The one thing about the pound is we have this head and shoulder pattern. We've almost reached the 200-day moving average. But the most important level, I think, in the pound, and we talked about it a lot this last week, was this 124.50 level. Is that previous double top? Everybody thought it was a double top. Then we got a false breakdown here. Then we got a reversal, right? So squeezed out all the people that were short on that double top. So obviously that level is going to be a big level on the way back down, and here we are. We stopped it. We actually went within 5 pips of it I believe on Thursday. We've been talking about it all this last week on the Face Show. Again, if you guys forget, we broadcast throughout the course of the week. Even though it's just 30 minutes between the team and myself, we talk about these levels. So again, if you're not listening in, or at least listening to the recording, because we put them on YouTube a couple hours later once we process them all and put them out on the site, they're on YouTube, so you can go listen to it even if you can't listen to us live. But anyway, we talked about what an important level that is. Well, I think that's going to be a really important level moving forward, because remember the Bank of England, even though they're not making their decision this week, that's next week. I believe it's next week. You might want to confirm that and jump in the comments down below if I screwed that one up. But the Bank of England is really, it's like the ECB. It's kind of like, do they, don't they? Are they going to raise rates? Are they not? Well, remember, if the GDP, if the jobs data on Tuesday comes in, weaker than expected, that's going to give a lot of ammunition to the doves out there. So just, watch that UK jobs data. I think it's going to be fairly important. Tuesday, we also have German ZEW data. So, you got the euro that, let me stop here for a second and talk about the euro price action. I tried to explain this on the trade-off show that I do every week with Chris Weston of Pepperstone Securities. We talk about, we were talking about this, but I couldn't give everybody a visual. It's just them seeing my talking head and me trying to explain it without actually showing. So this is going to be really important. I want you guys to see this, because this will kind of tell you a couple reasons why the euro dollar continues to break down. I mean, obviously you can point at the data and say, well, look at the data and, look at the US exceptionalism. We have all that. We know all the macro reasons why it's moving, but price was really telling as well. So let me delete a few things and let me just show you really quick. We can put those back on later. When you saw a drop of the euro from the 112.50 or wherever that high was, 112.80 I think it was, and we finally found a low, a month and a half later, what you'll notice is the bounce couldn't even get past the 38% retracement. Do you see that right here? That 30. Whoops, that's not what I wanted. I want to grab something else. Here we go. Whoops, that's not it either. Give me 1 second. There we go. All right, so we couldn't even get past the 38% retracement. We couldn't even get above the 50 DMA. What that tells you is when you get a move like that and the bounce is so shallow that you can't even get above a 38% retracement, there's a good chance that you're going to get a resumption of that trend and you're going to get what we call an ABCD or an equal leg move at some point. Now, eventually, I think that's what the dollar is doing. I think the dollar and the euro is going to maybe making its move down towards 105 and might even go further than that, depending on, well, a lot of different factors over the course of the next 6 months. But we don't have to go and try to think what's going to happen 6 months from now. As I like to tell our traders throughout the course of the day, I have a hard time figuring out what's going to happen in the next 15 minutes, let alone what's going to happen in the next 6 months. And I know you guys have heard me say that for, 10, 15 years. And it's true. I mean, but technically, and based on the targets that we see, those are realistic targets in the next several months, is that we are looking at a move towards 105 and maybe even lower. So the point that I'm trying to bring here is that the euro is trading very heavy, and while it's below this 200-day moving average that you see right here, it's hard for me to be bullish. And matter of fact, you have to get really above this high, right, that you see right here, or the 50 DMA, for me to turn actually bullish. But it's hard for me to even think, yeah, and I'm short euros right now, going into this week, short euros. But it's hard for me to look at the euro and go, oh yeah, I need to cover it right now. Why? I mean, it's bearish and it's continuing to move down. Now, there are reasons this week where I'm probably going to be navigating in and out of these this position because of the CPI data. We're going to talk about that here in just a second. But more importantly, it's the way that I think the dollar is going to trade over the course of the next between next week and the FOMC. All right, which is very important, and it's going to help you, or at least help me, navigate the euro. Now, look, I like to talk about this because it's important that I talk out what my plan of action is. Whether it happens or not is another thing, and I like to explain this concept to traders. I have enough experience, obviously, with a quarter century of trading experience and almost 30 years now of market experience, that I have a good idea of what I think is going to happen. Things a lot more times than not, and the reason why you guys listen to this continuously on these week ahead videos for years and years and years on end is because I tend to be right way more often than I'm wrong. But that doesn't mean I'm always right. But if I tailor my trading plan around my ideas of what I think is going to happen, and then it happens, and it falls into place, I tend to be more aggressive with my trading because my plan is coming to fruition. So I'm more confident in what I'm doing. My risk management is much better because I've already pre-planned everything. And that's what I'm doing with you guys today, getting into the CPI. So again, German ZEW numbers are going to be really important, but Wednesday is the most important. So on Wednesday we have UK GDP, which again, between the UK jobs data and the GDP data, both of that's going to factor into the Bank of England over the course of next week. But let's talk about US CPI, and let's talk about how I'm looking at this. So first of all, this is the dollar index this is my universal dollar index chart. Most of you, if you watched the Face show, you've seen this chart because we talk about it quite a bit. You'll notice that our next target is really the 161% extension of this move. Now, the dollar's got a couple of problems that we go into this week. We have CPI, right? Now we're talking about that, and I believe that the CPI data is going to come in hotter than expected. I just met with Jim Welsh from Macro Tides yesterday, and we were just discussing about the Cleveland Fed estimates, which were way higher than what the rest of the market's believing. And look, we've seen inflation data kind of get away from disinflation. Everybody's thinking, oh my God, here's a second round of inflation coming globally. That's kind of the narrative over the last few weeks. Well, I think that's still going to be the case, which is going to keep the central banks obviously on their toes, or at least thinking about raising rates, if not raising rates. And again, this is going to factor into everything that we're talking about. So with CPI data, I am still running dollar longs into CPI. I do think that the data is actually going to beat expectations. If it does, that should put the dollar index back up here towards the 105 to 105. 70, 80, which is this horizontal resistance. Now, the reason why this is so important is because if we break it, now we're making serious higher highs. I mean, we're already making higher highs as you see it, but once you start breaking these levels, now you're making really, really higher highs. And when you got higher highs, that's a trend shift, if you will. So even if you get a dip is going to be bought. So I look at that from a longer term perspective of how bullish the dollar could really become over the next several months. But with CPI data coming in, I'm actually looking to sell into strength. Why am I looking to sell into strength? And again, this is my plan going into next week. Whether my plan comes to fruition or not, we'll soon find out, right? Between now and the next week ad video, but I'm laying it all out for you guys as I do every single week. And if you like that, then make sure that you give us a thumbs up. Matter of fact, if you like this and you're like, oh man, I'm going to implement that plan and I want to trade it. Well, why don't you learn and find out if you can trade our money? Check out the trader funding program. And this way you can take an assessment. If you don't have the capital to trade $25,000 accounts or a $50,000 account or a $100,000 account or $1 million account, if you don't have that capital to trade, come trade our capital or see if you can. So take an assessment, you'll trade a demo account, and if you make 10% and not lose on a trailing basis more than 6%, then you qualify to trade our account. And you have to pass an assessment in a demo account. And once you pass that, now you have access to our live accounts, and you can take 75% or up to 90% of the profits. You make that decision, all right? And there's no time limits. And you have access to the Forex analytics community. You can have access to me. You can talk to me in the chat room, see what my thoughts are about this, that, and the other thing. And not just me, but the rest of the community and the Forex analytics team. That's a great package. So check out the trader funding program. You can find that right on our website, right on the front page of forexanalytics.com. You can see it right here. All right, so going back into the dollar, like if you want to employ this is what I'm thinking. CPI data is going to be hot. The problem that the dollar has is the dollar has been running stronger for a while. Daily sentiment index for the second day in a row and going into the weekend is at 90, which is a pretty bullish sentiment. Now, when you have all these bulls going in one direction, everything gets a little lopsided. So there's a good chance that we could see, some buyers take some money off the table, some dollar longs take some money off the table, following a hot CPI print, knowing that the ECB is the next day. Why is that important? Because the ECB, is a toss-up. We have a. Are we going to get a hike, or are we going to get a hawkish hold? I mean, that's really the question right now that we're all facing going into ECB. And I don't know. I don't know what to expect. But do I want to take on the risk that the ECB is going to be, they're not going to hike, and maybe they're just going to do a hawkish hike, meaning that they're going to wait on data and be more data dependent? I don't know if I want to do that. If I'm a dollar bull, which I am, and I'm long, which I am, am I going to want to take profits before the ECB, which becomes more of a risk because the euro represents more than 50% of the dollar index? Yeah, I think that is going to be, a situation that we need to pay very close attention to with the dollar. And so that's why, for me, I'm actually going to look to take some profits off the table, following the dollar index. And I believe that the ECB could give, the catalyst or a reason, at least for the euro to retest the 200-day moving average, especially if the ECB does hike. But more importantly, even if they don't hike, there's a good chance Christine Lagarde is going to be more of a hawkish hold, right? Saying that that they're ready and willing to hike rates, especially if inflation continues to run rampant, which obviously it is. All right, so I've kind of mapped that out for you, but again, I do want to be bullish the dollar, and therefore, if the dollar does pull back, I do want to buy it into the next week, and we're going to actually talk about this next week ahead video, obviously next Sunday, because that's going to be ahead of the Fed. So I think that the Fed is actually going to, I know a lot of you don't believe this, and matter of fact, the market doesn't believe this. The market doesn't think that the Fed's going to raise rates, but if we have a hot inflation print, right, the dollar's going to rally, then it's going to pull back following the ECB. I think, I might be totally wrong here, but then the market's going to start getting bullish the dollar because they're going to be saying, well, is the Fed going to move next week? But if they don't, they're going to set the stage for November for sure, and then you're going to get the dollar rallying. So I think you got to be buying pullbacks in the dollar. So I just gave you a very, very complicated, in-depth, let's just put it that way, in-depth reasoning why I want to be buying dollars on dips, but mapped out my whole strategy for you. So if you like that, thumbs up down below. Comment down below if you don't agree with me, which is fine. That's what makes a market, right? I'm not going to trade. I'm not going to trade on that. I'm going to trade on what I think. So, hey, if you disagree, feel free to disagree. Sounds great. All right. So let's continue on. We got past the what's going to happen with US CPI. We also have Australian employment. Now, you want to talk about something that's just not acting well. You got the Aussie dollar. Look at that bear flag. Yeah, that's a bear flag, and you could argue that that's a real big bear flag. You could really argue that, man, this thing is not trading well. We're below a multi-year trend line. And hell, I'm going to just say this. By the end of the week, if we close, below like 63 cents, we have to start looking at levels like 60 cents. I mean, that's just the fact of the matter. Now, we have Australian employment on Wednesday night, which is actually Thursday morning in Australia. If you live in Australia land, I'm not here to offend you. I just, for me, it's Wednesday night, but it's actually Thursday morning. Now, Thursday, we have the ECB, obviously, and like I said, that it's a hawkish hold, or do we get a hike? And it's pretty much up in the air. Now, after that, we have US PPI, which is coming out, and we got to watch inflation. Producer prices, consumer prices. I mean, look at yields. Yields are, if you can't tell, this is a bullish wedge. When you have consistent highs and higher lows, that's a bullish wedge. That means the propensity for yields to break out higher, which obviously, if you live in the real world like the rest of us do, higher rates is not a good thing. Not for a lot of things, for paying down debt, acquiring new debt, for paying higher interest all the way around. It's just not good. But yields are threatening to break higher. I mean, we have higher lows and consistent highs. That to me, is a recipe for higher yields. So, we're going to be watching that, especially with CPI and PPI both coming out this week. Now, on Friday, we have Swedish krona. I tend not to talk about it too much, but we do have Swedish inflation. This is going to be important because of the Riksbank, so just keep that in mind for those of you that trade the Saki. So there it is. We also have Empire State, University of Michigan, consumer sentiment and inflation expectations on Friday, which after next week, at the end of the week, I don't know how many people are going to be trading that, but you never know, because you don't know how hot that CPI data is going to be, and you don't know how much that the euro is going to influence the market, or the ECB is going to influence the market with their rate decision on Thursday. So a lot of big what ifs. Okay, now I've talked about currencies enough. I need to talk about equities, and I want to talk about the importance of where we're at. So let's go ahead and jump over to, let's start off with the S&P. So as you guys can see, let me get rid of me here. All right. We had this head and shoulder pattern set up, but as I mentioned to you guys, was it 2 weeks ago? I said the risk was, and that's why you can see this square. Go back 2 weeks ago. Go back to the weekend, not Greg's, last week, 2 weeks ago. I drew out this red square. Why did I draw out the red square? Because I said, or rectangle, because I said that is symmetry, right? You have the right shoulder developing, or left shoulder developing, right shoulder developing. So to have symmetry, we still need to build out a couple more weeks. Well, here we are a couple weeks later, but I think you could still argue that this is a head and shoulder pattern, right? It's a complex head and shoulder pattern, but still. Now, it probably stopped out a lot of shorts as we got above the 50 DMA, but this setup is still valid, guys. And that's why I'm going to say, 4,300 or 4,310 or whatever that support is right here, going to be important to the market. Now, that's not the only important support level. If you look at the Dow came into wedge support this week. It held. Again, go see, if you follow me on Twitter or X, go see my tweet from Thursday. Really big support on wedge support here. Nasdaq 100, same thing. We're still building out that right shoulder. So is this the right shoulder, or is that the right shoulder? Hey, it's a lower high. So, complex head and shoulder, it might be. Did it stop out a lot of shorts? Yeah, good, because that makes positioning a little bit better to play out to the downside moving forward. But you see how important that support is, because that's going to be trend line and channel support should we get there. Russell 2000. 200-day moving average. Matter of fact, you want to talk about head and shoulder patterns. I brought this up at the on the trade off with Chris Weston this week. You can say head, shoulder, knees and toes is apparent. Yes, that's what we talk about. So, there you got your neckline somewhere around here, 200-day moving average. After a double top, look at it. It's not like we're going to any place that's uncharted. If that head and shoulder pattern plays out, we're going to be playing out back towards these range lows somewhere down here. So that makes perfect sense to me, right? That makes perfect sense to me that we'd head back down there, especially after a failure up here. So watch the Russell 2000, especially if we get below the 200-day DMA. Does that mean I'm bearish? No, but I'm going to tell you where I'm just showing you where everything really turns bearish. All these support levels, whether you're talking about the Dow, whether you're talking about the S&P, whether you're talking about the Russell, whether you're talking about the Nasdaq 100, all those levels are going to be really important, because I have a feeling that most of them are going to be tested right around the same time. So that's going to be important. Now, also what we should look at really quick, let's take a look at the DAX. I haven't looked at the DAX in a while, but notice the 200 DMA. Wow, we come out of an ascending wedge. We're making lower highs. How important is this support level right here? I would say, if you own stocks in the German DAX, vitally important to your long positions that 200 DMA holds. Vital. All right, let's take a look at the last thing I wanted to do here for indices. I want to take a look at the Nikkei. We haven't looked at it in a while. We obviously know that support, that's where the rubber meets the road, right? Right here. Whoops, right here at this. But as you can see, this market looks pretty flaggy still. You know, I don't think there's any reason to be bearish in Nikkei yet, right? Matter of fact, that's more of a bullish setup than anything. It is. I mean, this is right now, as you can see, this is a bull flag pattern, right? There's the flag. Here's the top of the flag. There's the flag. There's the direction. You know, so right now it's bullish, but that could change because, you know, markets tend to move together. So if you saw a breakdown in the DAX and you saw the breakdown in the S&P, there's a good chance that the Nikkei is going to test, you know, at least support, if not anything. All right, one last thing I wanted to cover with you guys. I wanted to talk about gold. Now, I can do it one of two ways. I can do it here, okay? But also, you can go over to our blog, and you can check out the chart of the day for gold here on the 5th of September, right? And you can see this is a wedge. Now, the reason why I believe that this is playing, and I'll just draw it out for you here. The reason why I think this is playing out, and the reason why I think it'll continue to play out, that means that, you know, we're going to have some downside in gold, at least initially, is because I'm still bullish the dollar. So I still think that gold is at risk of, you know, doing one of those, or at least continuing to trade inside of this wedge. So just keep an eye on gold. I'm not bullish yet, but, you know, obviously if we get above 1960, that would be a pretty bullish development in gold. And look at silver. You know, silver. Let's get rid of that. That's irrelevant. You can see silver's trading kind of heavy now. I would say it's, you know, range bound, but the flip side is if the dollar continues to rally, you know, there's a good chance that silver could make a break back, you know, back down towards the $20 level. But silver continues to outperform gold, you know, quite a bit, or had been at least in recent weeks. So with that being said, I want to say, guys, gals, if you found this video to be very beneficial for you, make sure you give our team a thumbs up for working around the weekend to make sure that we get this information out to you. Remember, listen to the Face Show every day. We'll be covering, you know, especially like the ECB, which is on Thursday. We'll be covering live during the rate decision, or excuse me, the rate decision will be live. We won't be covering the press conference live because we won't be broadcasting, at least our team at that point. But we'll have a really good idea of what's happening, especially on Thursday following the CPI data and with the ECB. So with that being said, I want to say thank you all for spending your time with me. I know it's very important to you, and I appreciate each and every one of you. I'll see you Monday morning on the Face Show. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.